Hi, I'm Rameez Ali and welcome to the Smart Money Stack. I'm a certified blockchain expert, a senior executive at a crypto company, and the author of Programmable Finance, The Future of Money in a Tokenized World. If you're enjoying this podcast and want to go deeper into the ideas we explore here, grab a copy of the book. It connects the dots between blockchain, finance, and the future of value in ways that are both practical and visionary. Today's episode is about a foundational concept in programmable finance: tokenization. So, what exactly is tokenization? At its core, tokenization is the process of representing real world assets like money, real estate, art, or intellectual property as digital tokens on a blockchain. These tokens are secure, programmable, and tradable. They can represent ownership, access rights, or even future claims. Think of it this way: if blockchain is the infrastructure, tokens are the digital assets built on top of it. Everything from dollars to diamonds can be tokenized. Why tokenization matters. Tokenization creates a universal language of value, one that works across borders, platforms, and institutions. It transforms traditional assets into programmable units that can move instantly, follow rules, and interact with smart contracts. One of the biggest problems with traditional finance is fragmentation. Assets are siloed, real estate is managed by registries, stocks by brokers, art by galleries, loyalty points by airlines. Tokenization solved this by moving everything onto a common platform, the blockchain. The result? Faster transactions, 24/7 markets, lower cost, and global liquidity. This isn't just digitization. This is financial infrastructure built from the ground up. Let's look at the type of tokenized assets. Real estate, fractional ownership of properties allowing global investment in smaller amounts. Equity and bonds, public or private securities converted into digital tokens. Commodities, gold, oil, carbon credits, all tradable as tokens. Stablecoins, tokenized fiat currencies like USDC or USDT pegged to the dollar. Art and collectibles, NFTs that represent ownership of digital or physical works. Intellectual property, royalties, licensing rights, and patents wrapped into tokens. Loyalty points and rewards, interoperable tokens that work across brands and ecosystems. And this isn't just theory, it's already happening. Let's look at the token standards and interoperability. On Ethereum and other blockchains, there are widely adopted standards for creating tokens. ERC20, which is a fungible token where each unit is identical. It's used for things like stablecoins and governance tokens. ERC721, non-fungible tokens, NFTs, where each token is unique, like a digital collectible. ERC1155, a hybrid standard supporting both fungible and non-fungible tokens, ideal for gaming and complex assets. Why do standards matter? Because they make tokens portable across wallets, exchanges, and DeFi protocols. This interoperability is critical for building liquid, composable financial systems. Tokenization and real estate, a closer look. Let's walk through a practical example. Imagine you own a $1 million commercial property. Today, selling that property is time consuming, expensive, and full of paperwork. But if you tokenize it, splitting it into 10,000 digital shares, each token could represent a fractional claim. These tokens could be bought and sold on a digital marketplace, allowing someone from anywhere in the world to invest $100 into your building. Add smart contracts and rent payouts could be automated. Ownership transfer would be instant. Auditing and compliance could be built right into the code. You've just turned a traditionally illiquid asset into a liquid global investment opportunity. The rise of real world asset protocols. One of the most exciting trends in crypto right now is the rise of real world asset RWA protocols. These platforms bring off chain value like invoices, real estate, or US treasuries onto the blockchain. Projects like Centrifuge, Maple Finance, and Ondo Finance are helping business tokenize Receivables earn yields and access on chain financing. Tokenization is no longer just about crypto native assets, it's pulling traditional finance into the blockchain era. Programmable tokens equals smart money. Tokens just don't represent value, they add intelligence to it. With smart contracts, token can enforce compliance rules like restricting transfers based on KYC, automate royalty or dividend payouts, encode rights like voting or profit sharing, act as collateral in lending protocols. Evolve, split, expire, upgrade over time. Imagine tokenized concert tickets that can be scalped, or tokenized equity that instantly distributes dividends to shareholders across the globe. This is programmable finance in action. Tokenization and AI. In programmable finance, I explore how tokenization pairs naturally with AI. Why? Because tokens are machine readable. They allow autonomous agents, think AI powered trading bots or smart investment portfolios, to interact with financial systems directly. AI can buy, sell, lend, vote, or manage assets, all using tokens without human intervention. As autonomous agents become more powerful, tokenization becomes the interface that connects AI to markets. Challenges and regulations. Of course, tokenization isn't without its challenges. Regulatory clarity. Are tokenized assets securities? Are they property? Are they something new? Custody. Who holds the private keys? Adoption. Traditional players are still cautious. Legal enforceability. Does owning a token mean you legally own the underlying asset? This is why we're seeing new framework emerge. The EU MiCA regulation, pilot programs in the UAE, US, and Singapore. In my book, I argue that regulation and infrastructure must evolve together with clarity, not compromise. Institutional adoption. Tokenization just is not a Web3 experiment. BlackRock is piloting tokenized funds. JP Morgan has built a blockchain for tokenizing collateral. Goldman Sachs has issued tokenized bonds. Governments are running sandbox pilots. We're moving from labs to balance sheets, from pilot to policy. And if you're listening to this podcast, you're already ahead of the curve. Let's go through final thoughts. Tokenization is not a niche idea, it's a core building block of the financial internet. It turns value into software, it gives assets global reach. It unlocks liquidity, automation, and intelligence like we've never seen before. In today's episode, I've given you a lot of clarity on this topic, but I strongly recommend reading my book, Programmable Finance: The Future of Money in a Tokenized World. It goes much deeper, covering frameworks, real world case studies, and what lies ahead. In the next episode, we'll dive into stablecoins, how they bridge traditional and blockchain finance, and why they're the backbone of the crypto economy. Until then, I'm Rameez Ali. Thanks for listening to the Smart Money Stack.